Hello and welcome back, ladies and gentlemen, to ETBFSI Converge. On third day, we are going to discuss the survival of fintechs for the future. In the last 5 years specifically, fintech space has become really meaningful, dynamic, and remarkable. The kind of growth this particular sector has shown is far more better and resilient compared to what other BFSI companies showed in last 75 years. Just to give you a small example here, in last 75 years, if we built more than maybe 3,000 strong BFSI companies, including cooperative banks, PSU banks, scheduled banks, or even foreign banks, NBFCs, insurance companies, and mutual funds, if you all put them together, they're not more than 3 to 4,000. But in just last 5 years, we got more than 5,000 fintechs in India. Most of them are so dynamic that there are some companies which are coming with an IPO which sizes more than $3 to $4 billion. There are so many unicorn in this space, and more importantly, the whole world is looking at this space far more aggressively because Indian fintechs have raised their flag everywhere in the world. But here we are going to discuss not only how the journey has been of the fintech from wallet to payment and now heading towards lending and many verticals. The question importantly is what will make them survive in near future and how will they be sustainable? And I have with me, ladies and gentlemen, three strong speakers who will give me a great perspective here. And let me welcome them for you. My first speaker for this panel discussion is Ms. Smita Aggarwal, the Global Investment Advisor, Flourish Ventures. Ms. Aggarwal, glad to have you.
Thank you, Amol. Pleasure to be here.
My next speaker is Mr. Arpit Ratan, the co-founder and CBO, Signzy. Arpit, glad to have you.
Thank you so much for inviting us.
Thank you. And my next speaker is Mr. Ketan Patel, the CEO, Mswipe. Ketan, glad to have you.
Thank you, Amol. Thank you very much.
So, Smita, Arpit, and Ketan, I have obviously a few specific questions and one or two common questions because the topic is really interesting. And I will start with you, Smita, with a common question for all of you. But, Smita, the question that I have for you is how sustainable is the business model of Indian fintechs right now? Because we have seen a great shift from wallet to payment to lending, and now multiple arenas, whether it's wealth tech, rec tech, insurtech, and so many other tech businesses. But what is your observation? How sustainable these models are?
Thank you, Amol. If you really look at the macro picture of India first, I think there's a whole lot of positive things that are going to continue to keep this momentum going. So first of all, the size of the market, and the addressable market and the population that we have, that's hugely attractive. The second thing is the entire digitization, the uptake of smartphones that is, very rapidly growing much faster than, and I think the COVID has only kind of accelerated that pace. And the third thing is that financial services, as we all know, is absolutely the lubricant that oils everything that goes on in the economy. So as the economy grows, you just need to have the financial services keep pace with it. So from a macro standpoint, everything that is there in India, I mean, we are still, I think, at the beginning of the journey in terms of the potential of what more can be done of capturing the market. I think what is important is, and on top of that is we have a fantastic entrepreneur base with huge tech talent. So all of that is really great going for India, which is very unique compared to many other countries in the world. I think what is important for all of this to continue to thrive, as it already has over the last 5 years, is to keep pace with the innovation, to keep pace with the consumer demands, the consumer needs. And most importantly, I think the big opportunity in India really lies beyond the metros, beyond the affluent segment. It really lies in the vast mass market in the tier 2, tier 3, tier 4 cities and towns, and even further deeper down in rural areas. So those areas continue to be untapped relatively compared to the saturation one might see in the urban metros. So I think the journey has only just begun for India, and it's only going to get better. I'm very optimistic.
Very interesting. I think if we say that if we already have a lot of unicorns and if the journey has begun, I think then a lot of things we are going to achieve for sure. Smita, thank you for that note. Let me take the same question with you, Arpit. How sustainable is the business model of fintechs according to you?
Yeah, no, I think Smita made some very relevant points. And just to add to that, I think one of the less understood things about India is with the size of our population, there's a lot of unbanked segments outside of rural as well. Just to give you a data point, we add around 67,000 new people every day are born, which means that every month there are a lot of people without banking services, even in urban towns, who are entering banking services, right? In a country of 130 crore, we have only 5.5 crore odd demat accounts. And that's the size of the opportunity still left. Whether fintech is sustainable, I think with the advent of fintech in the last 2 years, we have seen the numbers grow drastically in things like demat. 100% growth has been shown from the number of accounts which were there earlier. One of the things, yes, is going to change is that I think digital is not the only factor which now will remain. One of the reasons fintech have survived and thrived is not only digital but product innovations. And I think, yes, it will become a differentiation. Some will survive, some will not. But eventually, a lot of product innovation is coming from fintech today, and with the size of market which is available, along with your existing customers who are today adopting for new and innovative technology, India is just at the beginning of a huge revolution in fintech which is going to come. And I completely agree with Smita. I think we are at a very, very early stage of fintech.
Noted your points, Arpit. Ketan?
You know, Amol, 3 years ago, if you and I would have discussed, we would have spoken of how banks are going to acquire fintechs. Now we have fintechs acquiring banks. So that's the journey that fintechs have been able to make. You have four or five unicorns in the fintech space, another 6, 7 coming up in the next 12 months. There are listings happening. I won't be surprised in the next 18 to 24 months, there is a fintechs index on the NSE, right? So that's where we are moving to. But more than innovation, I think we fintechs have been able to move from a one size fits all to a specific size for each consumer. So product differentiation has been the key. Most of the fintechs have been differentiating as far as their offerings are concerned. So they are going to survive and sustain and thrive. And what we are also seeing is Indian fintechs now moving abroad. So you have Indian fintechs who are now expanding their geographical reach and ensuring that they are present, their product offering is available to multiple geographies. So, that's happening. Most of the fintechs are now trying to cover the ecosystem to the best of their ability, right? From a one-trick pony, they are trying to ensure that the same consumer is offered multiple products. So there is no reason why, with the market, like Smita and Arpit said, with the market so large, there is no reason why fintechs should not thrive. And the first step has been taken. One fintech has already acquired a bank. Hopefully, in the next 12 to 18 months, you will see similar stories, more and more similar stories.
Just a quick question. Are you also in the line, Ketan? Are you acquiring any bank or something?
I would love to, yeah. I would love to. But the thing is, Amol, we would rather have our own banking license than acquire something, because bank is not about four walls. Bank is, when you acquire a company or a bank, it's about culture. The culture should fit. And I've always believed that if you build something on your own from scratch, the culture is what you get in. So, we are in the line, but we are in the line to, have our own banking license and not acquire something. We've been offered. A lot of banks came to us. But,
Okay.
We are not in a hurry.
Sure. Thanks, Ketan. Now I have some specific questions, Smita, Arpit, and Ketan, and I will start with you, Smita. When I look at the reports, there are various reports which says that India will have the fintech valuations will grow by 67%, and it will reach 250 to 160 billion by 2025. We have right now 6 fintechs, but we'll reach out to maybe more than 20-25 fintechs in next 3-4 years. There are lots of reports like that. Now you're closely working with the fintech ecosystem, investments, and also my question to you, Smita, is why are investors, and specifically foreign investors, are betting really high on Indian fintechs?
Yeah, Amol, I think it goes back to the fundamentals of India being very strong. I think apart from the things that I already talked about, the size of the market and the digitization of the economy and all, I think one other big unique factor about India is the whole public goods digital infrastructure that we've created with the India stack. We have the Aadhaar, UPI, now with SEM, the account aggregator piece coming together. So, there are all of these building blocks, foundational blocks already in place. So to start a new digital business, it's relatively very simple. It's kind of a plug and play. You don't have to worry about finding a payment solution. You just have to plug in simply into something that already exists. You don't have to worry about how you will do eKYC. It's already sorted out, which is very different from most other markets, including in other parts of Asia, where a lot of effort is actually going in building out the infrastructure itself. And since the infrastructure is being built out by the private sector, unlike in India, where it has been built out, with the mandate of the government and as a publicly shared infrastructure, in other countries, you don't have seamless interoperability. You don't have seamless, plug and play options. You don't have the open architecture that we have here in India. So that, I think, is a huge plus for India, because these are absolutely the building blocks. If you want to come up with any sort of a digital business, you need to have these fundamental things of having a digital identity, digital payments, paperless transactions, and have the legal backing behind all of this. Now, we probably don't realize that there are many countries in the world that are nowhere close to this. And that's, I think, very unique for India. And I think foreign investors recognize that that's a huge advantage. There's a flip side to this advantage also, because it's all ready to use, and anybody, even if you're a player who's just come into the game, or you're a bank who's existed for the last 100 years, you're kind of on a same level playing field. You plug into the same system and you get the same features. So the flip side to this is that your differentiation will have to come from your consumer-centric products and the user experience that you're offering. The differentiation will not come by building walled gardens, which is how we saw coming in many countries, including China. The whole concept was about building moats and walled gardens. So I own the customer and I own this ecosystem, and I'm kind of protecting everybody who's inside this. And that's how my unique advantage comes. Whereas in India, it's all in open architecture. So your unique advantage will come from the quality of your proposition to the customer. And that, I think, is super exciting, because that's where you can truly innovate. If you're creative, if you are focused on your customer. I think the other reason is, of course, there is the entire ecosystem of having different stages of for investors. You have a full gamut of investors, people who want to come in at a very early stage as angels or seeds, or VCs, or the growth stage investors, or the more mature investors. I think India offers a platter across the spectrum, because we are a relatively mature market in terms of we've been in this for the last 7-8 years. So we are offering a full bouquet of options for all kinds of investors to come in. The third, I think, is the domestic capital pool is also fairly deep. And that gives a lot of confidence to foreign investors. If you also get backing, if you combine your capital inflow with some local investors who have local presence, that actually gives a lot more confidence to the foreign investors who may not all have physical presence in the country, but they can then lean on and rely on other investors who are deeply embedded in the ecosystem in India physically. So, of course, overall, currently there's a lot of liquidity in the market, and people are, the capital is seeking high returns, and emerging markets are where most of the money is flowing. In Q3 2021, for the first time, the Asia deal flows exceeded that of North America. And a large part of, obviously, Asia, the capital flow has come into India. So there is a shift that is happening. For all of these years, we know North America has been the major hotbed of VC funding, but that shift of more deals happening overall globally in Asia compared to North America is a big shift, and I think that's only going to continue to grow going forward.
Appreciate your points and a very, I think, meaningful points, Smita, detailed one. Arpit, let me come back to you. And my specific question is about the collaboration. When the fintechs came, they said that they will be far better than the banks. They will compete with the banks, but ultimately, everyone ended up with doing a collaboration. And many fintechs are doing a far better collaboration with the banks right now. My question to you, Arpit, is what kind of obstacles do you face or the fintechs face in terms of collaborating with the banks and the financial institutions?
I think that's a very good question and the right question to address, I think, in the current times. One is obvious, right? The banks have started on a system and technology which was there 20 years ago, and fintech are starting now. So their worlds are very different, right? The culture, as was rightly being said by Ketan at the start, the culture itself is very different. Then the technology that they're using is very different. What we like to call legacy, but honestly, it's just different, right? The technology being used by today's fintech will be called legacy 10 years, after now. So because of the difference, one challenge which I think banks are facing, which they need to solve, is that they have to do almost a custom relationship with each fintech. So every time both your culture and systems have to, in a custom manner, integrate with each other, right? Both people and the technology. Right. And I think what banks' problem has been facing is that they can't partner with too many fintechs, and I think that was part of your question, that you've seen only few successful partnerships. It's not that Google has gone and tied up with all 20 banks in the country. It's been one or two, because it takes them a lot of time, right? And we've seen this problem being even spoken about in news a lot, that even after the partnership, there's a lot of friction. So they shift to banks. It's not been as seamless where a payment gateway had got all banks under one umbrella. And one of the problems for that is I don't think we have evolved any framework or system or process to engage with fintechs, both as technology and as a framework from a regulatory perspective. And this is something I think banks have finally realized, that a large part of their banking is going to happen through fintechs or consumer techs and third parties. And eventually they will invest in building frameworks and technologies to engage with fintechs, which are not like a custom relationship every single time with a new fintech, but it will be a platform the way it has been for a payment gateway. And emergence of that will need two things. One, it will need for the bank to also automate a lot of their processes and systems. Some of them are part of a legacy framework, and they need to move to an agile framework. At the same time, a lot of them involve human decision making, and those also need to be automated and brought to the culture of a fintech, which is real time responses to the customer on the app. So banks have to evolve from a technology perspective. At the same time, they have to come out with a framework in which they can easily engage with fintechs without having to do these custom deals. I think once the bank which gets it right first, some of them are early movers. I don't think any bank has got it right absolutely, but some of them are early movers. The bank who gets it first will definitely have a big advantage in the market. It will help both the bank increase the business. At the same time, it will help fintechs to jump on a bank and easily launch their products.
Okay, noted your points, Arpit, and appreciate your views. Ketan, you heard Smita who spoke about the investments. There is enough domestic capital available. The fintechs are rising. And Arpit also spoke about the opportunities and the kind of business models which the fintechs have developed in terms of the collaboration. Now, Ketan, since you're catering to the payment side of the business, my question to you is, most of the payments fintechs are operating in the payment space. And to me, somehow I see that, payment space is kind of over, what you can say, matured enough now, or we must say that it's over matured, because there are 3-4 fintechs operating strongly there, and perhaps there is no space for new players coming up. So what kind of scope do you see in the payment space right now? What are the new layers that you think payment companies can adopt going ahead and make a sustainable business model?
So, Amol, just to start, 3-4 players are not enough. I think another two, three players coming in will have, they will also have enough business as far as they have a good product to sell. But yes, you are completely right. The payment companies have matured, right? And now most of the companies like ourselves have been there for 7 to 10 years. They've seen the customer behavior. They've seen multiple cycles. So this is the time when most of the people have started expanding their product offering. BNPL is currently the flavor of the year, maybe the decade. So everybody's doing that. Lending is the holy grail for everyone. Everybody and their father wants to do lending now. Micro ATM is something like even RBI is promoting it. So most of the payment companies are getting into micro ATMs. Insurance is what people are focusing on. And the new fad is neo banking. Everybody wants to do white label current accounts. So, other than applying for a banking license, most of the payment companies will end up doing everything else. So I think that's the end game for everyone. See, everybody wants to cover the merchant or the customer ecosystem to the best of their ability. So whatever they can do, core, they'll keep with themselves. And non-core, they'll collaborate with people like Arpit and use their services. As long as the customer is the same and you are offering products which are not competing, collaboration is going to happen for non-core products. Core payment companies will do on their own.
Okay. Noted, Ketan. So let me discuss, here partly about the core products. And Smita, I will take your perspective here. You spoke about the capital, how the foreign investors are ready to infuse capital. And in fact, there are so many people, in fact, by reading our stories also, sometimes people, respond to it on the FinTechs and everything. So there is a lot of attraction. But do you by any chance, Smita, feel that, most of the FinTechs operating in India right now are looking at only that flavor and not focusing on their core? For example, everyone joined the rally of wallets. Then everybody got into the payment. Now everybody jumping on the BNPL and specifically credit. I, in fact, know a lot of FinTech companies which are offering loans to millennials who wants to go on a date, who wants to buy for a shopping, who wants to go for a shopping for a friend's wedding. So different loans. Obviously, there is a need and they want to what you can say, service the experience of the customers. I absolutely buy that point. But do you see that FinTechs are looking at flavor more than developing the core aspects right now?
So I think in a market as big as India, we will find all kinds of people doing all kinds of things. So you will have a certain set of people who will kind of ride the flavor of the day, flavor of the month, kind of wave that this is, I don't want to be left out and let me do what is apparently the cool thing or the right thing or the attractive thing or the profitable thing to do. And you may also find investors who kind of follow a trend kind of thing. But I don't think that's the majority. I think there is enough and more. If you look at our 5 years of history, there is so much of innovation that has come out of India. And if you look at a player like Zest, Zest started almost 5 years ago when BNPL, nobody had even heard of the concept of BNPL, and Zest Money actually started offering it. And it's only much later that people realize, okay, what they are doing as a plugin and embedding it along with a platform like Amazon or any other shopping place, that's kind of a concept of BNPL. But I think there is inherent innovation coming out of understanding where the consumer need is. And, Ketan referred to credit being the holy grail. While from a economic standpoint, credit is a very attractive thing to do because you can make money from credit. There is very little money or virtually no money to be made in payments. But we should not forget that India is actually a credit-starved country. I mean, our credit to GDP ratio is really low. And even if you go break that down by segments, it's even lower for segments like SMEs and low-income households or farmers or gig workers. So unlike other countries like the US, credit actually should not be thought of as a bad word because we are not an over-leveraged economy yet. In fact, credit is much needed, especially for the entire SME sector. having said that, it is important to be responsible in doing lending. You don't want to be, you can't actually show overnight hockey stick growth in credit, because credit is not about giving money. It's about collecting money from everybody that you've given money to and doing it responsibly. So I think, there's a lot of inherent innovation. If you see in the area of the entire small size, bite size, first time new to credit, lending to new to credit, I think all of that innovation has come out of the fintech space. How do you lend to somebody who does not have a credit bureau score? That was the traditional bottleneck that all banks and NBFCs use, that, hey, I don't know you because you don't have a bureau score, so you're not eligible. And the fintechs actually came and completely turned it on its head and said, that's no problem. We will lend to people who have never been lent to before. So I think it would be very uncharitable if we say that the entrepreneurs are following a fad. I think there is a lot of inherent innovation that's happening, and we should give credit where it's due. And there is more to that. If you see the entire innovation that we are now seeing in the agri-tech and the intersection of agri-tech and finance, again, it's like fundamentally agriculture and farmers and that entire supply chain has been thought to be a very risky proposition. And once again, tech-driven innovation is actually showing that you can bring in a lot of efficiency, you can bring in a lot of inclusion, you can actually, come up with win-win models which are beneficial to the farmers, to the producers, to the buyers, to everybody. Right. And those are great examples of innovation that are very unique to India.
Amol, if I can,
sure,
there, right?
Sure,
I think one of the also larger points in not only fintech but startups is that we should accept that some of them will fail. Okay. And if we need to be a innovative ecosystem, we will have to reward risk taking versus only winning. And yes, people experimenting with a lot of models. Some of them will not succeed. Some of them outright may look weird. Eventually, we should not punish the ones which fail. We should reward the ability of people to take that risk and innovate. And I think if we are comparing ourselves to the US, and as Smita was saying, that we are becoming one of the destinations which is favored by investors, I think we will also, both as investors and as a community, we will have to be empathetic to founders who are taking that risk, because more than, I think, investors are putting money, but a founder is putting their life, sweat, blood, everything into that startup. And whether that idea works, doesn't work, sometimes it doesn't, we should back these founders who have taken this risk and tried something new, because that will eventually lead to this growth of this country and the ecosystem.
Right. A very good rejoinder, Arpit. I will take a view on consolidation from all of you at the last question. But can you also add here, Arpit, and tell us, according to your experience, because you have partnerships with a lot of banks, can you tell us what kind of models are actually working and very beneficial for banks as well as fintech companies right now?
So I think there are two types of partnerships which are seeming to work with banks. One is where you are giving a service to the bank, in which case Signzy falls into that category, where we are providing service to the banks. If you are doing something which is not core to the bank on its own, I think they'll be happy to also outsource this or let a fintech like Signzy come and solve it for them. And I think we have like numerous banks that we work with today. The other category of startups are who are providing distribution to banking products. And in those cases also, banks find them as great partners because they are not challenging the bank's core product offerings, but are in fact helping their sales team or distribution teams to further leverage this. The only challenge that we have, coming in distribution partnerships is what I spoke about earlier, that the scale is not there today, because these two are different systems and which are not able to meet. So to manage that scale, both will have to work today, but eventually, as I said earlier, we can come up with a system. The in distribution, you have everything under the sun, right? And start from payments. I think years ago, they're so successful. The whole payment companies boom, which happened post PGs, and it circled. Now, of course, you have BNP, and a lot of them are actually financed by banks. While they may look like BNP and original products from FinTechs, but a lot of them are actually running on balance sheets which are given by banks. So they are in a way distributing the banking loans eventually to micro segments. And you have players who are then partnering, or like Ketan's, they've been doing great work over the years in helping banks acquire more merchants, which is again a non-core activity for the bank. Banks are happy to. So if you see distribution and core and service to the bank has been there, I think sectors where banks are not partnering and should are some of the risk associated sectors like remittance. Banks have been very, 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 even though there are enough startups, but banks are not, because there's the angle of money laundering. So banks have not been very, very open to partnerships. And I think crypto came slightly early in India. I think right now is a slightly better time. If the whole legal issue wouldn't have happened, you would have by now seen a lot of banking partnerships with crypto companies, because there's a very good synergy, right? A cash account which you can use to pay, and your crypto wallet which can be used to both invest and be used in a meta world. So it would have been great synergy and partnership for banks to also offer crypto products on top, but that hasn't we haven't seen. The other side, which again banks should explore and banks are not doing, is that banks themselves are also great distribution channels. They have millions and millions of customers, and we have seen very little places where banks have taken fintech products right from your invoicing, etc., and given to their SMEs and consumers. So I think these are two areas where I think banking partnerships will thrive as the ecosystem matures and improves.
Okay. Very detailed perspective here, Arpit. Ketan, let me bring you here. And as you said, that there is still a large scope. And I have seen, in fact, your company has, what you can say, ventured into many other activities, something like ATN Express, where merchants can withdraw the cash for the customer, something like that. So could you again explain, what are the new things that you are going to do, and how these new things can be beneficial in terms of merchants, in terms of adding new customers to your business, and ultimately making you as a fintech company far more sustainable than you are today?
So Amol, like you rightly said, we've been in the payments business for the last 10, 11 years. There is a rich data of transactions available with us. And what we realize is, basis those transactions, can we lend to the merchants? So that is the first thing that we started. We created a joint score with Equifax, where we use the bureau data and the transaction data, created a score. And now using that score, we are lending to these merchants. So we have our own NBFC. We've started lending to these merchants. What we also started doing is micro ATM. So most of the cooperative banks in the country don't want to have their own ATMs, right? Cash collection also is a huge pain. There are burial charges plus a risk of carrying cash. So we are tying up with a lot of cooperative banks for doing ATMs for them. So their large merchants is where we install the micro ATM, and that can be used for dispensing cash. So that is the second thing that we are doing. We are also just waiting for the corporate agency license to come. We are launching something called as insurance at pause, where the terminal will be able to dispense insurance policies. These are small ticket insurance policies like two-wheeler health, which the merchant will be able to dispense and make money. So, what we are transitioning is from a terminal which used to eat away into your profit by charging you MDR, to a terminal which is going to help you increase your revenues by allowing him to do insurance at pause, giving him a ability to put a micro ATM. So we are doing all these things to ensure that we cover the ecosystem to the best of our ability, plus give merchants various ways to make more money. Right, lending will help them grow their core business. Products like micro ATM and insurance at pause will give them cross-sell opportunities.
Right.
So that's what we are focusing on.
Okay. But can you give me, I give you one more minute, Ketan, to add this. Does this simply mean that I can go to a grocery store, buy two soaps and also an insurance policy at the same
Yeah,
time?
that's what we want to do. That's what the endeavor is. We want
Okay.
to ensure that the entire process is so smooth. Like just to take your example further, you walk into a shop, ask for two soap bars, and the shopkeeper asks you, "Okay, do you have your insurance for your two-wheeler?" And you
Right.
say, "No, it is expiring." He just puts the license plate number, gets the details, tells you this is the premium. You swipe your card, give your mobile number, swipe your card, and the policy reaches you via WhatsApp. So entire
Right.
process is 2 minutes. Anyways, you're going to wait in the shop for 2-3 minutes. Is that an opportunity to cross sell a product to you?
Sounds really interesting. Hope that will happen very soon. I'm so sure a lot of back end work will go here. A lot of literature has to go, be there. A lot of awareness has to be there. But let's hope that these things will work out very soon. Let me take, two specific questions to with all of you. Let's, maybe call it a rapid fire round now. We have covered a lot of aspects already in last 35, 40 minutes. I will start with you, Smita. Considering whatever that we are seeing right now in the fintech space, and Arpit, said about consolidation. So the question to you specifically is, do you see consolidation in the fintech space?
I think consolidation will definitely happen. For example, if you see the insurance sector in India, a lot of consolidation in insurance is happening, including Paytm and acquiring an insurer. We've already started to see what Ketan mentioned on the banking side, where you have a fintech acquiring a bank. So one fintech acquiring another fintech, or a fintech acquiring a bank, or getting into a license space. I think that is absolutely the path that will happen. It will happen for 2 or 3 different reasons. It will happen for scale. It will happen to get into adjacencies. It will happen from a geography. In fact, there is a huge potential for Indian companies and Indian fintechs to actually expand geographically beyond India as well. So I think definitely we will see more consolidation.
Arpit, I think you have done a lot of research on this particular topic. So what is your view?
No, I think we have reached that point where you now have, it is slightly, some of the sectors are winner takes all, and you have too many companies. And as Ketan was saying that, yes, there is space for a lot more, but you actually have 2x, 3x the number of startups which are in each segment. So eventually, as the market is more maturing, we are seeing on ground also a lot of acquisition happening from companies like Razorpay, who have acquired a bunch of companies, and we will see this as some of the companies will receive the majority of the funding. That's how the market works. And because some of the companies will receive majority of the funding which is coming into the country, those will eventually go and acquire. And Cred is also another example which is receiving the large share of funding among fintechs, and then going and acquiring more and more companies. So it's kind of the law of nature, if you want to call it. Right, so the bigger ones will eventually start acquiring the small fintechs and consolidate, and you will have few who will eventually then control the market.
Okay, Ketan?
Consolidation is a given, Amol. But my gut is, and I may be completely wrong on this, but my gut is this will be investor led, where consolidation first will start within the portfolio, where the investor will start seeing where a marriage can be possible within the portfolio, so that good strong companies can become stronger. And we are seeing consolidation in which way. So there is collaboration happening. There is acquisitions happening. Now I think what we've not seen a merger here, online player merging with an offline player, or within the same enterprise player buying a retail player or merging with a retail player. So these two things: one, investor led, and two, mergers within the same product line but catering to different segments, is bound to happen.
Okay. And one more question again to all of you. I mean, at one side, the banks wants to become a fintech company. If you ask every bank, they wants to become a fintech. And on the other side, fintechs wants to acquire the number of customers which the banks has, or the fintechs wants to become a bank by acquiring them or by obtaining a license through them. So it's a very different trend right now. in the whole financial ecosystem, considering fintech at the top. So my question to you is: we discussed the investments part, we discussed the different business models, we discussed how mature we are in terms of the product innovation. But now the question is, since we also know that the consolidation may also happen, the question is, what will make Indian fintech survive or sustainable in the near future, considering the heavy competition, considering the consolidation? Smita.
I would say number one thing would be customer centricity. You have to be extremely focused on who your customer is and continue to add value to that customer. I think that can only be your biggest moat against everything that's going on. So extreme amount of customer focus and keep coming up with innovative solutions for your customer.
Noted. Arpit?
I think product innovation, eventually, I think our banking products have remained the same for years and years and decades. So some of them have been innovated, like Zerodha finally did it in DMAT. So I think a lot has to come from innovation in banking products, which will lead to more profitability and not just burning of cash to acquire more customers.
And Ketan?
Covering the customer ecosystem is the way forward. So multiple products to the same customer. So for the same CAC, you can sell multiple products to the customer and then ensure that a couple of products make money for you. Not every product is going to make money. And by covering the ecosystem, you are sure that you have a huge moat. Somebody will have to outthink and outrun you to create another product to sell to that guy, right? So I think covering the customer ecosystem to the best of your ability is the way forward, and that's how fintechs are going to sustain and survive.
And last and the final question: where do you see the fintech companies in next 3 to 5 years? Indian fintech companies. I will start with you, Ketan.
No, I already answered that here. I'm looking at a fintech index on NSE in the next 3 to 5 years. Yeah, you'll have 20, 25 unicorns, maybe 50 listed fintechs. Hopefully, we are one of them. Both. So that's the way forward.
Okay, Arpit.
No, pretty much the same. I think we are still early. We see a 10x from here easily, just by our own numbers. And I'm sure everyone, including Ketan and Smita, who guys are looking at the industry, see this as well. Listing is short, right? Majority of it is now being dominated by fintech. If you look at just pure sectors, and eventually, yes, that should be its own index. I completely agree with Ketan on that.
Smita.
I would expect that there would be at least 5 to 10 fintech companies from India that would be a global brand.
Okay.
So instead of saying who is the PayPal of India, we are going to say the other way around. Right now, we are always benchmarking to Silicon Valley examples. Right. And I think that will change, and Indian companies should become global benchmarks.
Okay.
No, I completely agree with Smita, because yesterday I was talking to an investor and he asked me, "Are you the Stripe of India?" So I said, "No, Stripe is the Mswipe of US." So
that's quite interesting, Ketan. I think it's a very notable. In fact, it's a valid point. Once you obviously get listed onto the stock exchanges, please write this line as a quote that I said this to an investor. Very nice. Thank you so much, Ketan, Arpit, and Smita, for sharing your perspective. I must say that I learned a lot. In fact, there are 3-4 really remarkable points that all of you raised, and I think some similar views. We are all on the same page when it comes to the Indian fintech should rise and they should survive, and not just look at the consolidation and the reputation of the products, but grow more faster. Thank you so much again, for sharing your views at the ETBFSI Converge and taking part into this conclave. Thank you so much.
Thank you, Amol.
Thank you.